All right, welcome everybody to the Bookmap Academy meeting. We do this every Thursday, and with the goal to give you guys feedback on your content. It's a coaching and mentoring program. It's a whole program we put together where you create the content and you mark up your charts in Bookmap, and you'll get feedback from users, other members, and then also from the coaches in the Discord chat room, and uh, also in this meeting if you make good content and you're selected to cover this, cover your content. So the goal is to you become better traders. We go over great content with you and how others are using Bookmap, and then you can also earn Bookmap for free along the way. You can become a coach, etc. So we have this whole program, and let me show you just a little bit about it. It's over on bookmap.com if you're interested, and then go to the More button, and it's under here, Bookmap Academy, under Community. And then you can read through this in here in the steps and how to apply, etc. Now, that said, there is a subset of the community of the academy called Bruce's Pilot Program. This one focuses on building an edge. And the reason being is that even in the academy here, we'd have all these traders come in and they would know their setups, but they would just jump to another setup. And it was unclear that they had an edge. And I've talked to so many traders over the years. This is the biggest gap I've seen. They don't have an edge, and they don't know how to build an edge for themselves either. They understand the markets conceptually, they're passionate about it, but they're lacking this. This program is there to change that. We have a structured process that will take you through setups, and you will build out a trading edge for yourself. So again, that's a sub category of the Bookmap Academy. If you are interested in that, go to the More button from bookmap.com, and right under the Academy, you'll see Bruce's Pilot Program here, and you can sign up here. Now, with this, Bookmap Global Plus is necessary. You will need a subscription to Bookmap Global Plus. All right, so that's that. Let's go through a few other items in here. God, there's one more day left, I guess today and tomorrow, of our Blue Jacket competition. If you're interested in this, we do this once every other month or so, something like that. Sometimes it's a few months in between. And it's very similar to the Academy, except that you can post your content on X, Instagram, or LinkedIn with hashtag free blue jacket, and then you're entered into the contest, and you can win over $600 in subscription value. And you can also, we have a partner that is sponsoring this event with Tradier, a brokerage. You can win 1 year of Tradier's Pro Plus subscription. So if you have some really good content that you have in the wings, upload it in the next day or two, and you might win. All right, so bookmap.com/blue jacket, or you can take a screenshot with your phone and use the QR code here to go and see more details. But to enter is very simple. You just upload your content and you're in. We had our vibe coding webinar just the other day on Tuesday. We're going this direction in here. Is really powerful stuff because we have some pretty good APIs within Bookmap that you can connect to. And so with the vibe coding now, you don't have to be a coder. You don't have to know how to write a single line of code. And you can get started and you can create your own customized indicators within Bookmap. So there's a chat room over here on our Discord community. You can go in there, watch the recordings from some of the webinars, as well as chat and ask developers in there. We have some developers in there specifically for this. This is a great resource, so take advantage of it and start building this out. All right, our Bookmap Academy process. Well, I'm going to skip the impetus, key levels, and scenarios and strategies, and we're going to focus on the setup. This is the finally getting down to the execution. and that's what we focus in on here for the most part. But these are extremely important up here, 1, 2, and 3, to focus and filter your trade so that you take something high probability. In fact, these are so important. If you don't do them, your setup is probably going to be like 50-50. It's going to be like throwing darts. No matter how good and how much you've back tested it, you need something to filter it, to be able to look for something that works together with a trend or the environment or fundamentals or key levels, etc. Right? Is that important? So anyway, I continue to harp on that, but what we do focus is on the setup in here. All right, let's go through the disclosures and jump in. General disclosure: all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. All right, that said, let's jump in and let me take a quick look at who's in here and who we are covering. Just a second. Okay. Let's see, Shark. I might start with you because looking back at our list here, Lee Kai, we haven't gone over him in a few weeks, and I believe he's in here. Yep, he's in here, and you covered him. So let's jump over to him. Yeah, here we go. And let me invite him up to the stage here. All right. Okay, Shark. So take it away.
Hey, Lee Kai, how are you?
I think he's still maybe away from his screen. Maybe he can't. Let's try it again here, Lee Kai.
I'm shuffling screens around
Okay,
myself.
so I've invited you on the stage here. There you are. Now you're muted.
Oh, hey guys, how's it going?
Good, good. How are you?
Good, good.
Okay, all right. Shark's got some coaching for you.
Yeah, I just have a couple comments, Lee Kai. Great trade. Um, I see your first entry here is right up against some liquidity, right? I don't see anything before that, but your enter price kind of, as Bruce says, kind of waffles around and you get stopped out. Then you have another level of liquidity, right, on the offer with less volume, and you enter again, you come in with double the size. And I guess just from knowing myself, my question is coming into that trade with double size, is that a revenge trade?
No, no, no. The option flow was really, really strong that day, and
Oh,
we have really small strikes, so I think the volume matches. That's why I entered there. Yeah.
understood. Yeah, I know myself and how I've gotten emotional after losing trades before. So that was my question. If you were to take a loss on that second double sized position, does that violate your risk parameters? But it sounds to me like you knew exactly what you were getting into.
Yeah, I also feel like the seller just sort of kind of exhausted, kind of transitioned to buyers at that point, so I just entered it. Um, yeah.
Understood. No, I think all your criteria is in place. You got your second impulse move. I like the way you scaled out. You covered that first position on your second trade. I'm guessing you were way past break even on just that position, and then you held
Yeah,
on to
yeah.
longer.
Yeah. And I don't know if John and David noticed, like when we have small strikes, There will be like bunch of like lighter liquidity, and we're just gonna blow through them if we have strong flows. So I want Bookmap to match this sort of confluence. That's how I view this trade.
That's great.
Okay.
Yeah, those are my questions. I think this is a great trade.
Okay. Let's see. I'm gonna just turn it right over to the options experts. John, jump in, please.
I don't have anything to add. I think Shark covered that very nicely. Really good review, and no, I don't see anything more to say on that one. No, nice job.
All right. If that's that, then we're gonna go
That's
right over
that.
to David.
Yeah.
Yes, thanks, Bruce. Hi, Lee Kai. Great to see you. Apologies, I owe you a couple of replies as I do a few traders sitting in my inbox, Bruce. I'd be curious what was the price action on the left that's not covered by the screenshot, because I can see some logic as to why you took that trade initially at sort of like 13:05 on the clock. Had the price moved up quite a bit, do you recall? And you were just like I would do, we'll go in, let's get in, or yeah, that area there. Thank you, Bruce. And can you recall
Yeah,
what that was
yeah,
like?
yeah. I want to be honest. That impulse move is probably 5 or 6 out of 10.
Okay.
Um, but it was mostly. I think the sellers. I think on that day we dropped quite a bit, right?
Yeah.
On that
Yeah.
day, so I saw two flow completely turn flat, and it's been flat. The equity flow has been flat for a while, and I saw the book map, the volume start to come in. So I was like, "Let's go."
Yeah. And today we've seen similar moves. I was, if I throw, I was chatting with Wingo Laura earlier on, and I got stopped out on a similar sort of thing where you can get that 5-6 handle move. It just comes back on you, and yeah, it's a trend up, and it's racing away. You could say it's part of the market. And to your question there, or your point, Nikai, in terms of you've seen, and John, I think you're the same, John, in terms of I'm looking at SPY on Hero, I am looking at equities on Hero, and I'll also be looking at Qs on Hero, and I'm trying to find, I'll say in that moment, in that frame, in that session, which one is most in tune to the market. Sometimes none of them are in tune, and you see the comments where people, yeah, the market's tanking one way and the options are going another. Today it wasn't the case. I don't know what we got up to, John, in the end. Last time I looked, it was like 5 or 6 billion on spiders. It was crazy.
Mhm.
I love the way I'm believing what everyone else has said, Lee. I like the way you've managed the trade. Were you tempted when this gets going to start scaling in my usual line or often my usual line?
Yeah, I'm definitely tempted. Yeah, yeah.
Okay. Yeah, do keep an eye on the P&L. I know if Scott was on the call, Bruce, he'd be saying you shouldn't look at the P&L, but to me, that is my way of thinking. Okay, I've got a bit on the tab here. I've got a bit of room. I'm now going to throw in some more fuel to the fire, particularly again, saying on a day like today, and that. But no, good stuff, good charting. I like the checklist at the top, Bruce. Back to you, Bruce, please.
All right. Let's see. We've got also DNT. I don't know. I think I invited you up. But
He said he was away. I think if I read it rightly, Bruce. He's got some bits and bobs on, so
ah,
he
right,
might be
right.
with us, maybe
Okay,
not.
right.
Yeah.
Got you. Okay. All right. So, uh, Likai, I was kind of yeah, like David. I wanted to see this impulse move here, and that's kind of cut off. Um, and I also would. You said this is an options level, right? In
Yeah.
here.
So yeah.
Okay.
So this 2 days in the week, what I noticed is like equity flow and SP 500 flow will have dispersions. So the sell off is really driven by the equity flow. So my strategy is once the sell off in equity flow is completely gone, this is time for me to go long. So the impulse move, once we got a 5 or 6 out of 10 in the impulse move, I would just go.
Okay.
Um,
It
but maybe
sounds.
it's too early yet.
I don't know. That's what the problem is for me here is I can't see it here in the chart. So like if you can articulate that better, because you know what you saw, but I don't know what you saw, and because this is, I mean, we've talked about this before, not with you necessarily, but entering here into the liquidity. Typically, entering into the liquidity, we're looking for a pullback or a pause, and we want to get kind of into the trade, like down into here on the way up into liquidity, and then, or here you can see it paused again, pretty strong move, and you can see that but it still kind of went back and forth for a bit, and then it hit liquidity again, and then it goes back and forth for a bit, right? And that's very typical. So if you have that strong level, and you have something here maybe on the other side that you're looking for in skew or exhaustion, etc., then and you start to see this coming out the way that you like it, why not take it earlier? I mean, this might have been hard to grab earlier, that's for sure. I mean, it moved up there really quickly, but
Yeah,
anyway, that would be my only comment.
that makes sense. I
I'd
should
like to
definitely
figure
like
something
not
out.
enter the liquidity.
Sorry, Shark, were you
I just
saying?
wanted to say one. I just wanted to say one more thing, Bruce. You have a good idea. You get stopped out. You stuck to your idea and found yourself, and you found your next entry. So re-entry is only a commission away. I like that you stuck to your idea.
I
Now,
I like that too. um I think this is where it comes back to experience in trading, and Like, as you go through this, you're going to refine it. Do you want to get back in up here? And what if it came back down here, hit into this, and then really rocketed up, right? Would you be shaken mentally? Would it kind of mess up your setup? I don't know. But I mean, it's a possible scenario. Anyway, John, you were just jumping in.
didn't mean to. I just needed to talk to somebody here. I beg your pardon. Sorry.
Okay. No, do you see what I'm saying, Like? And that comes back to just refinement and getting improving just a little bit, with each trade.
Yeah, that definitely makes sense. I feel like I should not enter at the liquidity point. Should probably enter at the LVN or something. It's not an ideal entry for sure.
Okay, I mean, I'm being hard because, like, this is that, it's just this little pattern like that, and it happens really quickly. But I mean, the low volume pullback is you're kind of looking for the structure breakdown here, not up here. You actually, sometimes you're looking for taking some off up there, depending on how big of a move it is. But anyway, that's the best feedback that I have for you. That's all. But really great job, and you've been your progress in here has been just tremendous. Way to go.
Yeah, thank you. Yep.
Okay, let's see. This was it, I think, right, Shark? Okay.
Yeah.
Okay, but you have Taboho, and he was kind of on the list as well. So let's just jump right over. So since we already got it up, and Taboho is in here, he's here every week, and it's late for him. So Taboho, welcome, and again, tremendous job. You've been doing all these weeks, months. Anyway, yeah, commend you highly, and really great work, and it's showing. So, Shark, take it away,
Good evening,
please.
Bruce. Like Bruce said, you're putting in a lot of work. It's great work, and that's how you're gonna get where we all want to be. I see, I believe David calls it Monday morning quarterback. In hindsight, I see
QB.
this I see this one a little differently than you, where you have structure break on impulse move and high volume. I'm not seeing the volume or the impulse move there. Price is absorbed and backs away from that big offer. I just don't see that as an impulse move
This move
up
here,
on
Shark,
the
right? Or,
no up on the left, Bruce, at that first arrow there. I'm
oh,
not seeing that
oh,
as a high volume impulse move.
okay, okay.
I'm looking more at what you just circled as the volume in the impulse.
This one,
Um,
or this one.
yeah, right there.
Yeah,
That,
yeah, yeah.
that's what I'm seeing as the initial high volume impulse move, and then we have a pullback. Um, yeah, pullback right here, right? It's not super low volume on the buy side, but I see that as trapped buyers and buy side exhaustion, right? Prices moving up, but our volume's going down. Um, you've heard me call that donkey face exhaustion before because that's similar to something Donkey used to always look at. But that's where I see trapped volume and exhaustion, and then price moves back to the lower end of that structure and kind of sits on it, and then we get our second impulse move at a low volume node. I took the same chart and I drew on it a little bit. I hope that's okay to Boho. But below that, there's one that I drew on a little bit, Bruce.
Right, right. Okay. Uh, let's see. On a minute.
I mean, I do like your entry as price breaks through that liquidity.
This one.
Yeah, that's where I see the trade, and I kind of just marked out the criteria the way I see it. Impulse move,
Low volume pullback
pullback,
entry.
not on super low volume, but a pullback into exhaustion and trapped volume, and then back to our structure and a break of that structure.
Yeah. Yeah. Agreed. Agreed. Anyway, I'm gonna turn it over. Let's see. This time to John.
Now, this may be a little aggressive, but I like the entry at the buy side exhaustion, right at the low volume node. So you had the move coming down, move up into low volume, showing both on the volume bars and on the CVP column. So I thought that would be a great place because you've got liquidity some distance away where you can get a little profit under your belt before you get challenged that liquidity. Yeah, right in there, Bruce. My target would be down at 74.15. To me, the entry is a bit late. I would feel like I missed it because I'm right in some congestion where some bids are right in there. So that would be a little late for me. But if I were going to take this, I would be inclined. I would be interested where you had the buy side exhaustion. I thought that was well marked, and it did fail there. And it would be very limited risk. Your stock could be at 74.40, and with about a 5 handle risk to take that down, like I said, to 15. So that's how I see it. I think the entry would just be a little too late for me. Bruce?
David.
Yeah, no, I well said, John. I think that buy side exhaustion is a great place to get in. I'll be a little bit bold. I think time of day here as well, Bruce. If I'm right in terms of this is South African time to Boho, so this is just after London close. So the market, I'm guessing, rallied up into that close, into that.
It's before London close. Yeah.
Oh, okay,
Few
okay.
minutes to London close here.
Oh, so this is into it. Okay. So that
Yes.
you're aware of that, then you're playing that in your mind. Yeah, I as has been said, the entry certainly is a little bit late. It does risk that. There's certainly some, to me, where your exit was around about 16:55 time here, where the sell volume is picking up. That certainly, to me, in terms of a break-in trade, breakout trade, or whatever I wish to call it, is screaming to join in with some heavy scalping once the price is moving down. What we've got on this chart, Bruce, is what we've been talking about, and Lekai raised it as well. John raised it in previous weeks. So that heavy liquidity at 7445 area, that's pretty thick. We didn't get to it. We missed it by a couple of ticks at the top, didn't we? Yeah. And it stayed in there, and the price is coming down. So that's always something to be minded of. That's for sure. There is the lower liquidity that came in much later on. But in terms of when the price is moving away from that, I am very cautious as to whether we might sort of scoot back up in there, particularly unless the volume's there. So I'm all over the place here tonight, I'm afraid. I'm with John in terms of the buy side exhaustion as an entry. There's not a lot of volume, and there's not a lot of volume until a lot later on. So in some ways, it's a high risk trade, Bruce.
Yeah,
David.
yeah.
What do you want about David? It's not screaming. That's all. But then again, it's moved from 45, and it 40 50 point move on the way down. It doesn't show its hand until a lot later on. That's all. To you guys.
Yeah, that was kind of my feeling too. That this was this is a tricky one. I don't really see. I mean, okay. These moves have been big because of the volatility. I mean, this is like 5 points or so, and that's big volume there. Now it's kind of equal volume right back, and then I'm confused by it. I would be confused by it because we traded into high liquidity. It's enough points, but I don't see a lot of selling here. I see a lot of buying here, and then there's even high liquidity here again.
And the liquidity above stays in at 45.
Yeah, and then this guy way up here. So I would probably pass on this because like I don't see the setup. I want to see like a distinct move. Impulse move with high volume throughout the move. I want to see it maybe just kind of trickle up and not even retrace this much.
Not get to it. Agreed.
Yeah,
a lower high print.
And then I don't want to see liquidity up at a higher level up in here either. I would rather see it like here on the offer, and it's like repels it. But I do like the volume dot here. This looks good. It's just right into high liquidity though. And I don't know. That's what I see. Then and I'm just giving the kind of stream of I've been doing this for a while with you guys, but like especially the last like maybe 3 or 4 meetings, kind of stream of consciousness and just go through it as quickly as I can. So just to give as much feedback as I can, as quick as I can to Boho and others. But over in here, I really like this. I mean, this is grinding. It's moving. It's stopping people out. This was the bigger move to the downside. And look at that volume coming in. You can kind of, I feel you can kind of bank on that.
And I call these machine led, as often the guys see in spot gamma, because you put a ruler to that, Bruce. Okay, it's not the steepest of angles, but it's like any blip up, sell, and it's going down at 45 degrees. It's machine led, selling down.
Yeah, and these things, and they continue to grind.
They do.
But up in here, I would be leery. I don't see it yet. Anyway, that's my feedback.
We've stuck a fork in that, Bruce, haven't we? We really have. It's done.
Yeah. Oh, well, one thing, to Boho, like if this may help, like then keep an eye out for, we'll call this David-like volume and Tarantino blood. Yeah, when you start to see that, you can move this guy a lot further down and just trail. And I don't know why this guy is kind of here. Why not put it down in front of this one? Anyway, that's a bit of trade management. But your trade management over all of these trades over the last several weeks has been just excellent. So um, anyway, a few bits of feedback for you.
Question for David.
Hmm.
When when price is grinding like that, and
Yeah.
we just have that initiative selling into those bids just going. I mean, that's going to be like a kind of like a trying to turn around a train or something, right? It's not going to
It
stop on the
is.
dime. We can expect that to grind a little bit further when we see that volume.
I feel I do, and I then flick across to see, obviously, time of day, what's happening on the options market. But I will be, as a lot of us do, I'll be looking at NQ, seeing what's going on there. Less so on the Russell, and if I've got some time, I'll pick out the individual Mag 7 just to see if this, what is driving this. I'll be seeing, say, Tesla selling off very heavily or something like that to reinforce. And when I see that grinding, then I'm trying to remind myself as well to scale in even more than I've scaled.
So you'd be, what's your word, smacking it, or you'd be whacking it on the way down. You'd be hitting into that.
Yes. Yeah. Probably after say if we go after number 4 to the right of number 4, the pink number 4, that area there where I can see we're going, I'll flick at my other charts, make sure that the gorilla in the room is not going against me, options aren't going against me, and then I've got the confidence. I'm in the money. I only add in when I'm in the money, and I'll just add in as hard as I can. Yeah.
Okay, thank you.
No, welcome.
David,
If I'm
go ahead.
go. I was going to say, if I contradict myself here, but not fully, is that what I'm also conscious of is that this move, we started off at round about 44, and the action is picking up at round about 20. So we've come down 20 or so handles, and I will say to myself, okay, is this this is a proper rotation down? That's why I'm triangulating to everything else to make sure this isn't a sucker's punch. This isn't a rundown and I'm going to get caught out. So I do make sure when I'm scaling, I'm in the money. I'm not adding in until I'm in the money. I'm trying to keep myself in the money. Sorry, Bruce.
No. I was just going to say, like, you my interpretation of these kinds of moves in here are the buyers. They're out. They're just not in.
Yeah.
And they're not willing to buy. They know that this is a freight train, and
Yeah.
and they pull their bids. I mean, okay, now these guys did get filled in here, and you see some buying down in here, but look how this is taken, this liquidity is taken, this liquidity is taken, this liquidity up here is just taken, and we don't get a bounce. Typically, when we hit liquidity, we get some sort of profit taking or a bounce or something. Here, we're not, right? There's no buyers, or there's way more sellers. So they've stepped aside and they will buy at a different level at a much lower, probably the figure, 7,400 was, if this was yesterday, I think, right? So,
And I'm going to say you saw something similar today. I appreciate, correct me on the chart, in the
today,
last hour of, when the price went up from like 60 to 80, 90 in a matter of 15 minutes. Same sort of thing, except the reverse. It's bid.
Yeah.
There's no real pause, pullback. The price is going at nearly 80 degrees upwards, and it's just train wreck, as you say. It's a freight train going through the station. It's going right through the liquidity. Nothing's getting in the way.
Yeah, it just bulldozes right through it.
Yeah.
And I mean, you'll see these kind of moves in stocks, like they're just brutal. I mean, that's where, like, stock traders, be careful if you're on the wrong side of that. Just get out, because like that can move against you, like several dollars, and pretty much wipe you out. Futures, usually you get some, or at least the stock indexes, you get more of a pullback or something typically.
Rhythm, yeah, you can do. Yeah.
Okay. I think we stuck a fork in it, David.
I think we have it squealed. Yeah. It's time to cut off. John, can you cut off, please?
If we have time, could I just put something into the chat, and something I wanted to show real quick? Because I often talk about entering where I have a clean shot at liquidity.
Mm,
And
yeah.
this really isn't my trade, but what was going on here is that Nvidia was rallying, Apple was rallying, the option flow was very strong. And so I
Right.
took this basically these hook shots because there was nothing in the way ahead of me. And they had that all that liquidity above at 27,700, and it was a bunch of money to be made there. And nobody was there selling until we got up to those liquidity levels. To me, that's just easy pickings because it
Yeah.
doesn't take much, especially in a thinner market, for a large trader to come in and just shove that right up, which is what happened.
Yep.
Yeah.
Yep.
Didn't happen as
Beautiful.
fast as I would have liked, but 4 minutes and they just came in and just nailed it. And I was
That's
surprised it was
fantastic.
there because with all the other buying that was going on in the market, I figured, well, this is already gone, and it hadn't.
Yeah.
So I thought, okay, I'll hook this thing. But I just wanted to mention because I talk about slot, I don't want to enter in the face of liquidity that I have to jump over, that I have to grind through. That's just not my trade. I like a clean shot because I want to get in real fast and get out. Yeah, and that's
Look at
just
that.
that was an
Vertical,
example
John,
of that.
nearly. Look at that there, just after 10 minutes.
And you
Wow.
see that all the time, especially in the
Yeah.
NQ because it is thinner.
Thank you.
Yeah,
So
yeah,
so
yeah.
John, where would you be entering on this?
I circled them with. I have the. You see my
Oh,
blue
here,
arrows?
here, and here.
Yeah,
Okay.
I have them twice. Yeah, and my stop was under the trend line low.
Here. Okay.
Yeah,
Okay.
yeah,
Got you.
yeah. Yeah, but I really expected them, maybe hit a little bit at
Mm,
27,680, but other than that, I mean, there was a lot of liquidity sitting up there, and like I said, everything was rallying at that point, and but I see this a lot, especially in
nice.
the NQ, where you have daylight, and that's what I wanted to speak about. Just I don't have anything really in the way. If there was a lot of liquidity there at 660, no way I take that trade, none.
Sure. Sure.
But when I have a clean shot, in fact, it
Yeah.
took out that
Beautiful.
liquidity at 650. That was my indication that we were going to get up to that next level. And there
Here.
was no liquidity showing below the
No,
current
you got
price,
into there. That's in there.
right? So there was that imbalance to the upside. So that's kind of what I look for in terms of liquidity consideration, where you have an overwhelming sort of a preponderance of evidence that we were going to go higher and quickly. That's all.
Yeah. Yeah.
Speculate a bit.
You
It's great, John. I could speculate this is a bit like Lee Kai's chart. Well, Bruce, we didn't have the price action, was missing on the left hand side. We had that impulse move up. Then you've got that little bit of chop. But overall, it's scooting up higher.
Yeah.
Yeah. Yeah. Yeah, and this is rough to get
This is
caught up in, especially in the NQ, because you're like, oh God.
And I did. Absolutely. I thought, oh,
Twitching like a rabbit's nose.
you really did it this time. But like I said, everything else was buying, and the option flow was there.
Yeah.
And oftentimes, I know David has noticed this when we have these recoils, when it's down in the morning and then it comes up.
Yeah.
Oftentimes, when it comes up, it's led by the technologies.
Yeah,
Yes.
So I
yeah,
felt
It
pretty
is.
strong
Yeah.
that I could make this. Yeah.
yeah,
So
yeah.
when you
Beautiful.
get up to your target there, John, do you just take it all off at your target, or are you waiting to see if it moves to that next offer?
I had one shark at the first liquidity level, and then the other one just above it. And you can see the faint red line just under the liquidity at 770.
Yeah.
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 And then I thought, you just got 50 points. Take it, right? I mean, you're going to hold out for three, or you.
There'll be a
That's what
dip.
happened. That's what happened. Yeah, just take the money. And I don't know if it went up or not.
That's
In this
nice, isn't it?
particular instance, I had the same kind of liquidity picture on the S&P, but I just didn't have that gap. I just didn't have that, that vacancy of orders in between my entry and those liquidity levels. So initially, I thought, well, I'll just put it up there because it's always easiest, to take it to the market, which is what I did. Um, but yeah, that was just a money
Beautiful, John.
management thing. Take the money,
Beautiful.
cash the
Beautiful.
check.
That's proud, John. Doing us proud, team. Team proud.
Yeah, thanks, John. Thanks for sharing. Because like this is, I'm just looking again because this just drives me nuts. Like this, because if you look at it, like you've got your trend line, it's holding, you see clearly, volume coming in, coming back up in here. You get in, and then what does it do? You know,
Yeah.
and then you're just like, all right, well, this is still in play. I see that volume
Glad.
again. All right,
Yeah.
I'm in, and like,
Yeah.
oh god, oh god, oh god, and then
Yeah.
here's where like, well, it's low volume here, but a lot of times you
It's
get,
all on low volume though.
yeah,
That's
yeah,
the thing.
that is true.
That is the thing. Yeah, exactly.
Yeah,
But doesn't mean I didn't nearly have a stroke. But yeah, that was a big thing though. We didn't have any volume. It just kind of went sideways, gathered itself, and then went. Yeah,
yeah, yeah, and then I mean, hand over fist. I mean,
yeah,
just,
Yeah.
um,
yeah. But that's
Beautiful.
really what I was looking for. What I was looking for when I entered, not
yeah, yeah,
But
yeah.
like I said, I was able,
Yeah. 5 minutes before.
yeah, to endure for 4 minutes or so.
I mean, so just reflecting off that a little bit, like, what what I think, that kind of shows is like, confidence in your higher time frame levels, and technicals that you had,
Hmm.
and it's just like, look, this is still on. It's just, kind of coiling up and taking a break,
Yep.
and you're pretty confident because of those higher time frame levels. If you
Yep.
didn't have those things, then this could have very easily come back down into here, come back up into here,
Yeah. Yeah.
do one more, and then do that, some
Yeah.
whatever. So
Yeah.
but stayed with the trade, had confidence in your, because it's a studied, setup. It
Hmm.
matches your, rules, and stay in it.
Yeah.
Uh,
And usually this very rarely does this exist. It is the NQ that's generally leading.
yeah,
And then this time it was actually a little bit behind. The S&P was
Okay.
well on its way up to its level. And so, yeah, this really doesn't present itself, but because of all those reasons and because I had a clean shot and a lot of
yeah,
liquidity up there, I thought it was pretty clear. Yeah,
yeah,
exactly.
yeah,
Yeah.
yeah. That's beautiful.
Mm,
Yeah.
It's a
Man,
really good example of knowing what your idea is and sticking with it. You know where your trade is invalidated and it came close times, but you
yeah.
knew what your idea was and you just stayed on it.
In the chat, John, Mayor's
Hmm.
got a really good question, and remind everyone here, this is today's live trade. You can see there, it's his real trading. It's John's trade at the bottom. He's rightly asking, and it's, I guess, a bit of tongue in cheek to us here as coaches. Why are you not buying the dip there, John? Why were you buying on that breakout volume more with hindsight towards the top of those little bursts?
Hmm. And
That's
I
the
really
question.
didn't expect any kind of a pullback. I was
No,
getting in that
exactly.
because I expected that thrush
Yeah,
upward. So that was a bit of a surprise. And like I said, it was a worry because like, what are you waiting for? What are you doing? Because everything else was just buy, buy, buy. And so
yeah.
that was the reason because I didn't think I would get it back. And in fact, I wouldn't want it as much it coming
No,
back to that range because then you're just kind of possibly buying into a chop. I was buying this because I was thinking I don't have time. This thing's going to go immediately,
no. No,
and that was
this
the
goes back to the sort of what I was saying last week. Either aim ready or aim ready fire. You're like, yeah, this is live. You just
yeah,
fire. You get on with it. Yeah, you got
hmm,
enough. We're going upwards. Yeah,
yeah, yeah.
Well,
Because I had those other factors, right? I
yeah,
mean,
yeah,
everything else
everything
was
else.
the option flow and everything else was just going right through the roof. So
There you
it was like you have to go. You're going to have to hedge here. And then they
You got to
didn't,
get on
and
the
they
train,
waited. I
John.
was like, yeah, but that was the reason because I didn't
Yeah,
expect you know, those pullbacks, and I didn't add because I was fully vested. I had enough
yeah.
on.
No, you're right.
yeah. That's what I was going to say. Like, you're not going to get in because you're already in,
I'm already in.
and
Yeah, I'm already
you
in
can't
four.
take
Yeah,
the risk.
yeah,
So just let it play.
yeah.
Uh, I don't know. I mean, look, it's not a, it's something that, I've noticed again and again. It's like, here, this is where that impulse move started.
Hmm.
And a lot of times, and that's exactly where your stop was. Okay, you didn't get hit,
Hmm.
but I'm wondering, like, would you have taken it a little bit lower, or just get hit and then wait for seeing something
Yeah,
like this?
been a little lower. Yeah, I recognize that. Yeah.
I don't know, just time and again, like usually this is like a little high volume node in here, just a little one, because it went back and forth for a bit, and then the buyers came in and slammed it.
Mm-hmm.
But I don't know. You can see kind of what it did here. There's the swing is here, and they did stop hunt, or they did test it below
Yeah.
1, 2, 3, 4 times,
Yeah.
and then it went. So
Yeah, I had a little bit of luck with this, and it's not really my trade, but what sucked me in was the picture, was the clear picture to liquidity.
Yeah. I mean, it's really it's really great to see charts like
But the
this.
reason why I brought it up is because I try to, when I make an entry or when I do these reviews and I see the entry right in the face of liquidity, I'm just like, oh gosh, you're going to have a challenge as soon as you get in.
Yeah.
Why not have a little distance, make a little money under your belt, so then you can work it. It just seems like you get in and then you have to jump this 5-foot fence. And that's really what I wanted to get at here.
Yeah. Absolutely. I mean, this whole area. Look at that. It's just lovely. You're just like, oh, come on.
Yeah.
But another thing, and this is, I think, more with David, and kind of a question to David. Like, this looks good. Now, this is a lower high. Now, we don't know that until it does it. But like, it's still kind of struggling here. When you wait for these guys to come in hand over fist, are you waiting for it to break that high on that volume? Or are you getting in like down in here, right here, to trade it up to here and then look for that momentum to continue?
What you've described is how I have always traded it, Bruce. You're right, because you read me well in terms of I'm typically getting in higher than I should. What I'm more trying to do every day now is, per the chat, is try and get in lower, try and look for those 180s off the lows ish and be bold about them. But more than often not, I've done exactly what you're doing, exactly what John is doing, in terms of everything's lining up and I just start hitting the bid.
Yeah.
But then being under a little bit of pain at times as well. But I have, if you look in the chat, Bruce, I've stuck in the options chart for today. Now, as we've said on previous weeks, Brent doesn't like me doing this, does he, John? With the way I do my charts.
But it's good for short-term hooks.
It is.
Absolutely.
You can see hero to down spiders. I know John's trading AQ, but as he said, spiders was ahead of Qs today a little bit. You've got the total for the day of 5.2 billion, and I'll say whatever that means, but you can see that's the highest we've had over the past month. But look at the blue spike line there, Bruce, that I've highlighted as that box. That's the puts, and that's basically, John will have better interpretation than me, but that's everyone who's owning puts getting out of puts, going, I don't want these anymore, please take them off me, get out of here.
Yes.
And that's before the white line, the price action has really moved that much. So John's looking at these, and he's looking, as you can see on my tabs, you run equities as well, John, you're running Qs, you're running all this other stuff. He's seeing that going on. He can see that the boys and girls that are holding put options are setting fire to them. Mm-hmm. They're on the phone and going, take these off me, please, because the market is going up before it goes up. So John's seen that, and that's why he's, like me, perhaps buying more at the top than perhaps he should do.
Yeah, that's correct.
So
back to you, Bruce.
Yeah, I get confused with these because, like, in hindsight, it's easy, but then here, look at this one though, David. How do you explain this one on the blue?
I'm going to say that's go on, John. I see that as a reset. That's the thing, as John said.
That's a reset. Yeah, that's a reset. Is this 1 minute, David, or 30 seconds?
I think it's five. No, it is on 1 minute. You're right. Yes, on 1 minute. Yeah.
Okay. What that is, it's a little bit misleading because that's not a continuous chart. So he's resetting at a very short time interval. So if you were to plot this over a day or over an hour, you probably wouldn't see that extreme, and you probably wouldn't see the extreme going up. So you just kind of have to filter this in your mind as to what's going on when you have both price action and they're selling puts by the blue line going up. That's when you can kind of put the two together as a confluence. But and that's one of the reasons why Brent discourages
I see.
anything other than the 1 day time frame, because you do get sort of
Yes, yeah.
it can easily get a misread out of this because of the resets.
I see.
Yeah, so
I see.
I can understand why you're getting a bit, why that's confusing. But if you spend enough time reading it and see it for the short term, you can see those impulse. That's exactly what that means that David said.
Yeah.
They are not just getting out of those puts, they're just torching them. They want out quick.
And,
Yes.
and they do it again.
Oh yeah.
You know,
Yeah.
and that's when it starts to kind of, well, it's still bases for a bit.
Yeah.
It took
Yeah.
so it takes a while for these to work out. Sometimes.
Sometimes.
Yeah, interesting.
To Ray's question, I think we've hopefully covered it, Ray, in terms of what we are looking at here. So this is the options charts from spot gamma. I'm looking at the call and the put options across a variety of different instruments, and I'm triangulating that with what I see on Bookmap and a little bit on Ninja. So if my mindset is I'm trying to go long, I'm looking to go long, or I'm in a long, and I can see the options market, as we've just talked to, is alongside me, that's really great confluence. That's really good confidence. But there are days when it can be the other way as well. So for me, the options doesn't lead my mindset. It's secondary most of the time, isn't it, John? For me, I think.
Yeah, I would agree. Absolutely.
Yeah.
So-
It's a confluence between the two, really.
Yeah.
Sometimes it can be equal, but the option flow, the order flow on Bookmap, it has to be there for the entry for me.
It does.
Um,
Oh, completely. Yeah.
Yes. Yeah.
Okay, so if you see, well, okay, so for you guys then, if you see price hitting your key level on options, but you don't see anything in the order flow, it's a pass.
Pass.
Yeah. But if you see
don't-
something in the order flow, but it's not really a key level, or it's in front of, or something, it's also a pass. Or would you kind of? I guess it's contextual, and it's. I'm not trying to corner you guys, but like
No.
just
no.
how you're using your higher time frame levels and order flow together.
Well, I don't challenge the key levels. I trade off of them.
Right.
So if it's in front of, if I'm just getting long and I'm one handle away from a call wall, I'm not taking that trade. I'm not going to challenge that.
Right.
No, but if if I want to get long and I'm just above a put wall, well, yeah, I'm getting long there.
Yeah.
So it's you always want to be. I always want to have the option levels to favor the direction of my trade naturally. So, but I don't want to fight them. No, especially the walls and the vol trigger. I want to have those on my back. Yeah.
Yeah. Got you. Yeah.
And we've seen in some previous weeks, John and Bruce, some real reversals, some proper 180s at vol trigger and other ones that we've shown time after time.
I had one today.
Nice.
Well,
Yeah.
that one that you showed, I mean, it was just beautiful, David. I showed it in the volatility pro trader webinar, and then what you said about it too, like, look, I took this because and scaled into it and went heavy because it was an A+ setup. I mean, you had all of these price crash down into your two different options levels on all three indexes, and then you saw a big reaction starting to unfold. You're like, yeah, this is, it's got everything. Go in hard.
Yeah, I think that was you, John, actually. But yeah, I'm with you.
Oh, did I say
on that.
David? I meant John.
You did not. It's okay. It's okay.
I'm sorry, I'm losing it over here.
Senior moment.
Yeah.
That's fair enough. Nothing wrong with senior moments. Trust me.
It's not just you and me, David. We got
It's not just
friends.
us two. We got Bruce infected. Fantastic.
But yeah.
Yeah, and I don't know. It was just I thought it was just brilliant. I loved it, and then also I think rubbing off on you is David's influence of like just start throwing those contracts in there.
For sure. Yeah. Yeah.
Uh,
Yeah, because of the confluence.
yeah,
Absolutely.
yeah, exactly. It's super strong.
Yeah.
All right,
Okay.
let's see. Toboho, that's a long far cry from where we started. I don't know. Toboho, if you had any comments or questions for some of the coaches.
No, thanks a lot, Bruce. I don't have any question. I've been absorbing all of the feedback. I'm going to retake this trade. Thanks, Shaq, for all the markups. It's been great. I got a good feedback. It has given me a different perspective. For me, I think I was convinced by that liquidity wall at 45. I think this was the first clearest supply of liquidity for the day.
Yes.
And there was a lot of volatility before that.
Yeah.
It's just that that part is it's out of the screen, and then the sellers came in with that liquidity, and then it bounced off from that very nicely, and that was really the first clearest move um, of the day. Maybe the reason why I might have entered late is because where I entered, that was the fairest, the clearest supply of liquidity there, and I could see it as well. I could see the target, where my target would be, and that's really what convinced me to enter by that time. Before then, the liquidity was not very clear here, and then after I entered, then that's when the buyers came in at the bottom there, which convinced me to keep trailing the stops because I could see that liquidity is coming in and sellers are transacting through that liquidity towards that overnight high level, which was like the high of day. So that's what convinced me stay with the move, and the fact that the sellers were not withdrawing that liquidity wall at 74.45. But I take all the comments. I will retake the trade again. Thanks.
Yeah. No, like I said, Toboho, really inspiring your work ethic
Yes.
and the progress. This is something that, I need to kind of mention to the pilot program guys like yourself. I mean, you are, you're ready for phase 2 and 3, basically. I mean, like, the forward testing live market, the live trading in live market with very small size. You've put in so many trades, and you're still learning nuances, but we always are. We're always learning nuances, and then that's the improvement part for the most veteran trader. They're doing the same thing always, and just getting a little bit better. It's like kind of in their DNA, right? And they're always learning new edges, new things. Heck, I talked to Scott Pulsini today. Actually, funny enough, I even mentioned the pilot program to him, and he's like, "Huh? What? Yeah." He wants to partake in it,
Nice.
So he's like, "Oh yeah, oh hell yeah, I'm always like learning. I'm always like game to find more edge. So if he likes it or he doesn't, like but he's gonna try it, you know. Anyway, always you guys are always in replay mode. We always are, but Toboho, you're ready for next steps, and
Yes.
it's important to. I haven't mentioned this, and it's been bothering me. Nan as well. Others, Tomi, Vinfra, a lot of you guys, like I know you have been in forward testing and some live trading potentially, but like we don't want to just wallow away in replay. That's not the point. The point is to build an edge, and then Phase one, and I'll just go through this really quickly. Phase one is to be able to see what a good setup looks like. Okay, that's why the replay files are provided. So you know what it looks like, and you know how to trade it, and you know how to identify it. And that's what the trade markups do, and that helps build your confidence for that good setup. And then you're going to see all the nuances in the live market. And then you're going to start to learn about how to manage those, how to take those, but did it meet your criteria? And that's why the grading is so important, to grade it properly. And then it's always constant study of going back, learning a little bit about the nuances, about the setup, and improving over and over and over again. And this will happen for the rest of your trading career. Basically. All right, enough said. I'll get off the soapbox. Let's see who is up next. We haven't. Who's in the
I've
room
got
here?
Tony.
Tommy's in here.
Tony.
Yeah. So
yeah.
let's jump
And,
over.
But really good chart in there, Bruce, both, and really nice to see by DeBoho. If I say traders, I'd be embarrassed, I think, Bruce, if we pulled up some of my marked up charts from like whatever it was to 18 or 19 or something, compared to the quality the traders pull together for it. It's fantastic. It really is.
Yeah, hold on a minute. I must have missed this. Mayaka, and then I don't have your other one. But and then I know that Ray Livermore is in here. So Ray, we'll go over you next then, because you know, I think this is your first time then, or maybe second time. So I definitely want to get you in there, and John covered you. So we'll go over that next. Let me find your other Notion file here. Hold on. Oh, there it is. Okay. And let's bring Tommy up to the stage. Hold on a minute. Right. Thanks again, Taboho. Let's get Tommy. Okay. There you go. Welcome, Tommy.
Welcome, Tommy.
Thanks, how are you?
Good, yourself?
Not too bad, not too bad.
Excellent. So let me rattle into these straight away. So we've got a couple of trend line break trades here, Bruce. Nice charting to reiterate that we've said already on that. Didn't see the checklist, but apologies if I missed that. Classic price action we've got here, Bruce, for the time of day. The first chart here, I think also Mayaka took as well. When I say classic price action, so what I was going to sort of labor the point a little bit here. You hear me talk often about playbooks. You hear me talking about rhythm. You hear John talking about things like that. So this is early on. The market's opened up. Be minded of what I call suckers punches, where the market's going to go one way and then it's going to reverse and it's going to go the other way. Be thinking in terms of your pre-market prep, all those things, where the price is, looking at maybe if you're trading just RTH, where London's been, where Europe's been, or whatever time of day, the previous session, Asia, Europe, or the US, thinking about those reversals. John said about that earlier on, where things can really reverse around. So what I'm thinking, and you'll be thinking here, is the market is definitely scooted up on the open here, Bruce. We can see that. We've got the classic liquidity that's just come in late. Now, as you were saying last week, John, reminding us often, where that liquidity comes in late, it's not necessarily going to get filled. I don't think we've got any statistics on that one, John, have we? You or I? But the stuff that's not resting for a long time, what is a long time, David? Maybe a couple of hours or overnight. It's often there to bully, and we can see, Bruce, it didn't get filled at that 950. It scooted up to it, didn't get it. There's a little bit of a pull actually when it got close, and it's quickly back in. We've got some beautiful sell volume came in, and the sell volume there, whether that's 951, Bruce, is well above all the buy volume. So that is a screamer of we're going to go back down. And look at the angle. It is dropping. Now, whether that was a news, a tweet, or a truth, who knows? But the price is going down, and it's going down at pace. It then, as you rightly go, we've got some passive accumulation we're going through. It then steadies off. It flattens off at round about, where that's 35, 34, round about there. And then we start to get some buy-in comes in. It's not a clean pattern. There's not a real clean higher lows and all those other things in between. But if Jack was on the call with me, Bruce, he might defend me on that and say, yes, we did actually start to get that channel pattern that we've drawn in previous weeks, Bruce. And that's when you get in. That's when you get into me. I can see you get in just above 40. You got in. The volume's not brilliant. If we look down at the volume below, yes, it's green, but it's lukewarm or tepid at best. So it is a bold trade. There's also, as you're getting in, you've got new liquidity than 50, 40, 48, and then, okay, after the event, more on the side. But still, you get in. I like where you've got your stop. You just maybe, I think I put it down as sort of 4 or 5 handles behind, and you quickly move the stop into the money, which is the right thing to do based upon that volume and also the time of day. And I say about the volume again, Bruce, that sell volume at 51,951 was pretty bold compared to the buy volume that we're seeing on the left of that, which is in that opening frame ish. So you got a bit of money out, you got your dignity out, and then the price just wallowed around. So was it a good trade setup? Not really, but you did what you could with it. I guess as DNT and others would say, we should perhaps sit on our hands and just look for a better setup. But still, you played it well. You moved the stop, which is important. John, help me, please. I'm in trouble.
No, you're not in trouble. You're not in trouble. You're doing just fine.
Keep digging, eh?
Bruce, if I may, I want to bring a chart into the screen to make my point. And my point is this: on the trade that Tommy's showing here, we had some buyers coming in as the market was coming down, but we really didn't have accumulation. It looked like we had a little bit of skew coming in, like the buyers were trying to pump the brakes on the way down. But to make the trend line break in accumulation, you're looking for a lot of liquidity to get filled. And in this chart, and this is just taking a snapshot of Bruce's video, that is a lot of liquidity there. It looks like they're just loading the boat here if they're buying in those areas. And then it happens right at a key level. Then in this case, it was the 21,000 level. And what makes this extra special is that buyers got a bargain. They put liquidity down here. The market went down, filled that liquidity, and then those sellers right in there got trapped. And that's going to facilitate most likely a move to the upside. But it's the first two elements of the criteria list for a trendline break accumulation is that do you have true liquidity being filled, true accumulation on the way down, and are you at a key level? I actually had this keyed up for Ray because the same thing happened with his trade, but that's what I see. And by showing this chart, I just wanted to clarify the difference between the liquidity and what you're showing here and what you did on your trade. You didn't quite have all this volume being filled, this accumulation at these levels. So that supports what David was saying. It was that really wasn't, it didn't meet the criteria for a trend line break because the first two elements were not satisfied the way that they should have. You see that little dinky, yeah, they're just coming in and they're just trying to pump the brakes here. And that doesn't surprise me that you're going to have sideways action after that. And like David said, that looks like skew on top where they're pressuring this market to stay between 47.50 and 50. Bruce?
Yeah, I'm going to turn it over to Shark because he's an expert in this setup. So I've got some comments after.
Perfect, sir.
Shark.
I'll agree with John and David. There's not a ton of passive liquidity getting accumulated there. That key level, I believe that's the overnight low.
Yeah.
The
Yeah, it
you know
is.
the overnight low, the overnight high, as well as those pre-market pivots like the high and low, the ones that happen in the hour or so before the cash open are tend to be very, very strong levels. They're not high time frame levels, but price reacts at them. I see that as a key level. I think where price breaks below that level would invalidate that trade idea, where it breaks below the pivot low, right below where you have that box drawn out. Yeah, I'd say that right there would invalidate that trade for me.
Okay. Anything else, Shark?
But yeah, yeah.
Okay.
Can you hear me?
Yeah, yeah. Anything else?
No, I think I'm good.
Okay. Um,
Great market.
yeah, I'm also kind of along with it's just kind of a weird one, Tommy, to be honest. And I have to say I have to go back and I'm guess I'm a little confused by I actually have been a little confused by some of the price action recently. I'm like, huh, it's just
That's
like
that.
it's not clean and clear,
No.
and so this one is confusing to me too for a number of reasons. Like, I think you got some ideas here, but I don't think you got it. Like, I would have liked to seen it graded, like David was saying.
Yeah.
This is a big break. This is your impulse move. I kind of view this almost as a low volume pullback, to be
Yeah.
honest.
Yeah.
And because you got all these guys in here now, there is some
Um,
volume in here, so but it is lower.
Yeah.
And if it can break this overnight here, and you start to see like you're making lower highs in here, and it's
Mhm.
there. This is what I've seen on the lower highs, and you see buyers in here. They don't have it. They don't have enough
Yeah.
to get up here. So it's like, and it wasn't much selling in here, but just not enough buying. So watch out, because if you get down here and those sellers pick up, this thing will probably really move.
Yeah.
So yeah, but even a low volume pullback, I'm a little confused on that one as well. I don't quite see it either, but um, yeah, this is just a very strong impulse move.
Yeah.
And that's what I'm kind of keyed in on. Then it's confusing because you do have your overnight low here, and you're using that as your higher time frame level, which is good. Uh, anyway, compliments to you, because look at that management.
Yeah.
Exactly.
This is going to really help you when you're like, you kind of knew as well this isn't quite right or something's off, and you followed your instincts, and in this case it worked out real well, and you saved yourself. You made a little bit of money, it looks like, maybe a tick or two, but so anyway, yeah, it's kind of a weird one because it is near the open, it looks like, and then like this came out of, I mean, it just traded up in here, and then boom, it's moving
Straight
away.
down.
Yeah. So anyway, Tommy, any questions to the coaches?
Yeah, I mean, I agree with everything that you said. Yeah, this wasn't, I mean, definitely this wasn't an A+ setup.
Right.
Like that's why I moved my stop really fast, because I
Mhm.
like this wasn't like an A, maybe like a 5 or 6.
Nice.
Good.
Yeah, I mean, the passive accumulation is not really there. I mean, my whole idea was here that kind of there was pockets of buying there, and then the sellers stepped in again, and then I didn't enter because of the heavy liquidity just above the buyers, and then when buyers kind of got above that, I saw the heavy liquidity coming in on the offer, um, and I just kind of entered, and I think my stuff was really tight as well. And when buyer stepped in, I moved my stuff really fast, but
Hmm.
that's really it.
Mhm.
I mean, that probably it's like a 5 or 6.
Mhm.
The passive accumulation is like nothing. It's almost like people, like someone just like someone like a big player came in on the bid, and then sellers just took it on, but that's it. And it's not like a really big passive accumulation. So
Yeah.
yeah, that's it. I used the overnight low as my key level, but yeah, I mean, I kind of saw some buyers there, but it's not like a really aggressive accumulation. Even if you look at the size of the delta bars, it's kind of if you look if you see it on the left, they're just way bigger, so it's not really an A plus setup.
Yeah, yeah, yeah. Well, I mean, look, in the end, like Tomi, you knew that you're experienced now, and you've been through a lot of these. You've improved, and you managed it, and then you shared it, which is great because we can look at these and give feedback and then say like, hey, look what you've learned, and you've also learned to like, yeah, I don't really trust this thing. I see the buyers coming in, they're breaking. I'm gonna be pretty aggressive to manage this. It either works or it doesn't, type of thing. Probably in the future, you'll probably look at these and go, yeah, it's not even worth it. I'm not playing.
Yeah.
But you got to get there though, and this is how you get there.
Yeah.
But against that, Bruce. Sorry, against that.
No, you're good.
Yeah. Is that dependent? I'm at the screen all day. John's at the screen. Many of us are at the screen all day. So we have the luxury of passing on things and all the other great stuff. But if perhaps you're in here for an hour, it might be your lunch hour or before you take the kids to school or something. There are times that many of us do need to take those trades. But as long as you know that it is a 5 out of 10, 6 out of 10, and you've got to be so aggressive with your stop management. And you might get so it's not necessarily a trade, Bruce. It's more, we have those phrases, it's a trade, a punt, or a bet. It might be more of a punt. You think, yeah, okay, well, she might scoot up here, and I might get 5, 6 handles. Oh, okay, I got a handle out of it. As Tom would say, it's burger and fries. So there's that thing I know to add into the chat without, again, contradicting myself, Bruce. John.
My favorite thing about the setup is that when you have those huge liquidity levels established in the market and they're being filled progressively coming down, you can see this developing at your key level. In fact, I think when you have that liquidity, it adds credibility to your level, because we all have all kinds of levels. But in this instance, in this setup, the market's telling you that your level is credible because there are buyers coming in and they're getting filled. And I think that's something I put into my trades, because I am a counter trend trader at the levels, and it really has helped me a lot because I can see it developing, and you just didn't have that here. I think we beat this one up, but yeah.
We stuck a fork in it, John?
We've been beating up all of these charts like to death, like flogging it to death. Like there's
no audience left now, Bruce. They've all left. It's just us lot.
No, but they're good learning experiences.
It is, yeah.
I think they're the best learning experiences, rather than sit here and say, "Hey, that was a 10, beautiful." These are the ones you learn from. Yes, sir.
Learn to survive.
Yeah. Tomi, like again, compliments. Like that's that's something we haven't talked about too much. But surviving, trading the next day, but then learning from it. So you shared it, you're learning from it, you're getting some feedback, and you're saving your account. So way to go. And that came from your intuition, because before you were taking stop outs. Now like, it's not the greatest, but I'm going to give it a shot. And like, it either works or it doesn't, and it's not, I'm out. And now we definitely have beat it to death.
To beat it up a little bit more, do you mind if I
okay, you're all right, you're back.
Get a baseball bat out in the nails. Go on, buddy.
Yeah, I'm coughing, right? Coughing. You guys are funny. Shark, I just had a question. The trendline break accumulation, we talked about this last time regarding Tommy's charts, regarding his trend lines. I never really heard your response to him regarding this, because this is similar to what my feedback was a couple weeks ago, and I didn't catch your feedback. If you don't mind reiterating, And then Tommy, if we could get your response back to Shark, like what was the consensus?
On it, on a funky trend line.
Yeah.
Yeah, I mean this one's tough because that trend line, that pivot low is just almost an exact double bottom, right? So I'd say this is an okay trend line. It does have that lower low after the trend line touch. Right there, yes. But it's, it's close. That's why I said that would be the spot where I would invalidate the trade based on that being just I don't know, a tick or two lower than the previous pivot low.
Yeah, I was going to comment on that, the trend line. I mean, and this is again just my point of view on it, but like I don't really see this as much of a trend line, to be honest. I know what you're getting at because look at this, all of this selling, this big impulse move. But I like to see it kind of respected a little bit more. I mean, I know what you're looking at. I get it, and I see the horizontal broken here too. But anyway, I like this looks better to me. And as a trend line, it's it's respecting the trend line on a few touches. If that makes sense. Anyway, I don't know if that answers the question or makes a new subject completely.
Well, that's helpful. I
I
mean,
think
it's go ahead.
no, go ahead.
I don't have much to say. I just was asking Tommy, what do you did you come to a conclusion about the what did you think about what Shark said? I don't know what feedback you got from Shark regarding the trend line, but I'm curious to hear your response as
Yeah,
well.
because I think Shark mentioned this before. That when I have a trend line, I like the way I draw it up now is I find the lowest low and I find the highest point before the lowest low, and I kind of and that's how I draw up my trend line. And before that, like you have to have like a lower low, and then you draw the trend line that way. Because I think what I used to do before this is I had like I didn't have like a lowest point, and I was still drawing up my trend line. And I think Shark sent like a few pictures from like a book. I don't know if Shark, if you remember that, and when you send that in that, basically what it said is that you have to find the lowest low, and then that's how you draw up the trend line. So I don't know if you remember sending that over to me, but I saw it in the pilot program chat. So
No, I do, and I'll stick that link back in the Academy channel to that thread. I think the goal behind that rule set of Victor Sperandio's is consistency. And there's going to be odd spots where like this one. This is kind of a tough one to draw. You could probably put a tighter, more fractal trend line in before this, and then as price gravitates up, draw a second one. But I think the goal is just to have a consistent set of rules to follow. That way, you're not just drawing lines at every random angle. And I think you got that down after looking at those pages. It's just keep your trend lines consistent in the long run.
Okay. All right. Let's see. Let's move on. Let's see if we've got another one from Tommy here. So David, take it away.
Yeah, so similar sort of trade, except we're going the other way, David. So this one here, we've got another nice short trade. We've got 4 or 5 handles on here. We've got the liquidity coming in again, similar sort of pattern here, Bruce. Similar sort of time of day. You've got the thick blood coming in. It pulls away. So I'm talking about 57.5. That pulls away when price gets to it. You haven't got as much selling volume as we had on the last one. That's it, perfect. But we're coming back from that. Then you get that skew coming in at the 60 level, and that's quite a chunky number. That is over 1,000 contracts gets dropped on the board there. And if I'm looking at the white lines, I think there's a large lot trader in there. So that's a serious bit of bullying and intent. Common theme, it's there for threatening, I think, more than to get filled, although you may see that again a bit later. The volume is picking up. You've waited to break out of that structure. So there's a bit of a rectangle, Bruce, in your mind between where the passive accumulation, that's it, yeah, around there, breaks through that, and then you get in. And yet, like we saw in the last trade where you told me, you've been really tight on your stop. You're moving it aggressively in, and it comes back on you, and you're out. Your goal for your profit was much lower down. Liquidity, I think, around about 32. Fantastic idea. Didn't get there, but like we've just had, you saved your dignity and you saved your account. Is there a trade here? I think more of a trade here than on the last one, but again, it's not screaming for me. Yes, it is breaking that trend line, as all of you will talk about. It does break that structure, but if I send a volume king, I love my volume, and I'm not seeing the volume coming in. And we compare that to on the left, Bruce, at 10 o'clock, 10:10, 10:09. We've got a feel of where the size of those bars are, whether 700 or 800 or something like that. This selling volume is tepid. It's not a great setup, the angle and that. So you got away with it, but not sure. I'm going to throw it back to John, please. He's great at digging me out of a hole.
I agree. I think that it's a better trade than what you showed
Yeah.
before, but it's not an A+ trade. But you do have a bit more liquidity being filled on the way up, and you have a nice transition from buyers to sellers,
Yeah.
just about where you got short, and you have new liquidity coming in at 74.32. So not bad. Not an A+. You'd like to see a little
No.
bit more of a progression, a little bit more liquidity being filled on the upside. But you do have that skew coming in at 74.60, which is significant. And you were that was great for you to identify the significance of that, as David mentioned. So certainly better than the first one the last one we talked about, and I think it's good. Your stop management is outstanding, and I agree with that. That's going to work or it's not by the volume transition. So you get short, you bring your stop in pretty tight, and you're going to follow it down. I think would have given it a little bit more because of that liquidity staying in the market at 74.32. But initially, I agree with your stop, but I think you may have trailed it a little too close there. You got to let that breathe a little bit more than that. But yeah, that's what I would say on this.
Oh, done, John. Good points. Good points.
Bruce?
All right.
I do have a question though. When you have time, if we have time on this one especially, but you go ahead.
Let's turn it over to DNT. If you guys have any comments or questions, you guys know this setup extremely well.
I was just curious. I pinged Laura to see if she had anything to say about the trail stop on this. I wanted to see other people's opinions as well.
Okay.
That's all.
Shark.
No, I agree with everything John said. Like the other trade, live,
Yeah.
survive to live another day. I think our end goal, and one of the hardest things for me to learn over the years trading is not to let myself give back or get too far underwater, because then that's when my emotions really kick in. Is just survive the trade. If it's going to roll over, just get out, free your mind up to look for the next better entry, or to sit on your hands.
Yeah. It's good comment. I also agree with all you guys. There's something here though that like kind of worries me, Tommy, and this is I think something for you to. It's more of a nuance and about your kind of psychology and trade management on it. God, I hate to use that word psychology, but like as we get into the nuances, the psychology and your conviction in the trade, it really becomes much more important. What I see here, and now I'm not sure if I see it or not, but it just made me think this, that if you're being really aggressive on your stops like this, then it means you don't believe in the setup and letting it run. And that's bad. If that is true, I don't know, because you already know this isn't a great setup. It's better than the other one, but it's still not great. And if that's the case, and it's just like, I know I'm only going to get a scalp out or two, a couple points out of this or whatever, then that's something different. But like, or maybe you just like decide like, you know what, I'm just going to pass on these trades. It's not worth it. I don't know what it's going to do. Maybe it just comes down to here, and then rockets right back up into this liquidity, and then it comes back down. And then after you get taken out of a few of those, you're just like, yeah, this isn't worth it. Or maybe it is worth it. It's like there's enough meat on the bone here for just a little bit, and that's something for you to answer for yourself. But if you have any comments or any reply to that.
Yeah, I mean, I trail my stuff the same way every time. This whole idea is coming from trading is life. And in this trade, sellers took on the heavy liquidity, and then it kind of went below that liquidity. And I really didn't want to see buyers above that level again. So I don't know if you see the liquidity around 74.43. Yeah, and then the sellers just took it on and they went a bit below that. And I just didn't want to see like any buyers above the liquidity level because when price hits liquidity, it can kind of like bounce back or maybe chops around for a bit. And that's why I trade my stuff that way. But normally, like even if this would be like an A+ trade, I probably would trade my stuff the exact same way. Yeah, I just wait for the structure to break and I just trail my stuff. But yeah, in this one, I think I got stopped out by like a few ticks maybe. But other than that, like this is how I trail my stuff like every time.
Okay. I
So
mean,
yeah,
I just think it's important to you like it's really kind of the crux of the pilot program is you have confidence in your setup because you've traded it many times over and you have data on it as well. You've seen it many instances and variations of it, and I just wanted to make that point. So,
Can I add something, Bruce?
yeah, sure.
I think part of the confidence, or a big part of that confidence, would come from your initial stop placement and knowing before you get in the trade your risk tolerance. Like how much can you give up if your stop gets hit, and back to what we had just mentioned, and still survive. Like you have to have a risk tolerance. What are you willing to let go of so you can take another trade or trade the next day? I think that's a lot of the confidence is knowing where your stop needs to be based on the size of the trade.
Yeah, and well said, Shark. And Tomi, I mean, like it's a quick one in here, but like, there's this is a low volume pullback. Okay, I know it's a small one, but it did do it, and here it is here, and then back down to the bottom of the range. I don't know. I don't know what happened. It's kind of the price action's all over the place. Maybe you got your trend line break accumulation in here. I mean, you don't have much accumulation, but buyers are here. Maybe buyers come in and try to reach back up into this liquidity level. Anyway, again, stream of consciousness. That's all I got for you.
Great points, Bruce, on that stop stuff, and there's good comments there. the chat as well. And you've heard me, you've all heard me say over the weeks. I think last week I maybe shocked a couple of people when I said, "Oh, my stop will be down so and so and so and so," and you're thinking, "Hang on, that's 10, 12 points, David. What is wrong with you, boy?" Whereas other times I'm trading exactly like this, where I'm very aggressive. It does depend on that psychology. Depends on my mood. These markets, as you said, Bruce, the price action, what it is.
Yeah. Sometimes you don't have a choice.
You don't have a choice, but importantly, you've got to trade as you want to trade.
Yeah.
Thing that we do say, so if this is how you wish to trade, and you want to snap that stop into point and a half, or sorry, handle and a half, and that's what you're going to do, and you're going to get busted out 4 or 5 times a day, but actually you're going to get 1 or 2 where you're going to make 6, 8, 10 points handles. Brilliant.
Yeah. Again, great stuff, Tommy. Great nuances, and the progression has been tremendous. I'm kind of curious what if you just can reflect a minute here off of the pilot program. What do you like? What don't you like? What can we work on? How can we make it better, etc. Like anything holding you back, or just hit us.
What I've been trying to do is kind of I'm trying to keep things really simple. Like what I used to do before this is I had like 10,000 key levels. I was looking at like 5 different things, and the only thing I'm trying to do is just obviously like I'm looking at the order flow and everything. I just want to keep it really simple. Yeah, that's all I'm trying to do. I'm trying to keep it really simple and just trust my edge. And yeah, that's all I'm doing. Yeah, I mean, I like it really much. Yeah, I just really want to keep things simple because before this, like I was doing many different things, and obviously, like I'm learning like more like every day. But my main goal is to like keep things really simple and just trust my edge. And that's what I'm trying to do.
That's right.
That's really great. Yeah.
I don't think we're reviewing Mayakas tonight, Jeremy, but if we were, you'll see his charts are fantastically busy. They're fantastically colorful. There's a lot going on there. There's a lot of intel in there, Bruce. Lots of indicators, lots of levels, daily levels, weekly levels, monthly levels, all of that stuff. The message that I was having, or I was going to say on this stuff, Bruce, is as a trader, we need to find on what works for us. I know I'm saying the same thing, I'm afraid, week after week, but it's what you lean into, you being plural, VU, you lean into what works and it gives you the confidence to make the trades. And that might be like me. What do I lean in mostly? Volume. Yeah. So if volume's there, I'm trading.
Yeah.
We can see here with Mayaka, he's leaning to a lot of stuff. That's fantastic. If that helps him be a better trader, love it, day in, day out. And these sort of busy charts, Bruce, now you know my life story when I first ran my own book in 10 years ago, and I was trading Forex with Mike Patterson and Ryan Littlestone, and I was building all my colorful charts, a lot copied off Anna Coolin on Forex. And these guys, technical word, hanging a lot of shit on me. They really were, because they just trade off a stick chart, and David comes on with a colorful chart, and they don't, but it's what worked for me. Yeah. And that's the thing, Tommy. So keep it simple if that's what you want. Just because this chart is great for Mayaka doesn't mean it's going to be great for you. To you, Bruce, catch me, help me.
No, Tommy, what you said is awesome. I mean, like it's also what Vinfra had mentioned a couple of weeks ago about like focusing and going back to basics and just keeping it really simple and focused. It's actually a big tenet of the pilot program. It was the number one thing I battled with tons of people, and D&T will remember probably.
Oh yeah, I'm one of them.
And then look what you did. Look what you did. You totally turned it around, and focused. And And then like the results were very different. And Tommy, you as well. So way to go. These are I think are the steps along the way, that uh, now that even if it's a setup that you might not even like that much, supposedly, let's say it's like maybe you gravitate toward another setup later, or something you really like, but you know the process, and you know the focus, that any of these setups can actually work. It's really not the setup so much, is that you have now studied it, you put it into that context, you've done the back testing, you have data on it, and you focused on it, and it works. Fantastic. Okay.
I mean, look at John's trades from NQ earlier on, Bruce. That was tried and tested, reps and sets, muscle memory, live market, NQ, bang, he smashes it, kills it. No prisoners, John.
Yeah, and now he's all influenced by you. Bad influence by
I'm influenced by him. Don't trade with RTA. I always think John's not trading now; he's fishing. What are you doing?
Yeah, bad influence, but I'm going to owe him a Cougaran at the end of the year. That's what I've learned from him.
We need your help.
Yeah. All right. Well, speaking of that, let's jump over to John and Raymond. Ray Livermore here. Okay. Hold on a minute, and I think he's still in here, right? I'm sorry, Ray. We wanted to get you a little earlier, but at least we're getting to you. Thank you again, Tommy. All right, John, take it away.
Okay. Can we make that a little bigger? Yeah, there you go. Still a little bigger yet? Okay. So we touched on this earlier with one of Tommy's trades. This is a trend line break accumulation, but really I don't see the first two conditions being satisfied on this. Yeah, the passive accumulation of buyers coming down, but not on high liquidity. And I showed that chart earlier from Bruce's YouTube video, where you didn't have really that substantial liquidity being filled, like it wasn't planned out. And then the other thing, you really want to see that come to where your key level is established, because what the market is saying is that level is significant. It's what you've labeled as key. The market is telling you or giving you some confirmation that there's some credibility behind that level. And so you see you have your key level marked above, so you're actually trading up to it. So I've discussed this as a reversal trade, but I don't think it meets the criteria for a trend line break and accumulation trade for those two reasons. The first two criteria, you have them marked as a 10. I don't see it that way, because I don't see the liquidity being filled on the way down, and it didn't pivot at a key level. But you do see here some great observations on your chart. I labeled it as A, where you have passive liquidity coming into the market at your key level. So the market's telling you, okay, that is relevant. There's some credibility there. Now let's trade to it. And at my item B, we see the structure being formed, sideways action, and then you have volume coming into the market at C, where you could consider getting long, and that's where I would be interested in getting long, a break of that structure up to that liquidity at your key level. I see you came in a little bit later than that in the face of that liquidity. Bruce, do you see his long just right
here?
Yeah, there you go.
Yeah.
So to me, I see that coming in a little late, because the volume had already occurred, had already pushed into the market, and now you're in the face of that liquidity at your key level. And we spoke about that a little bit before. How do you handle key levels? Well, I don't fight them. And to me, you're picking a fight here at liquidity at a key level. But once you pass through that, you do get a little bit of a low volume pullback in here, and then a little structure, more liquidity above where you could get long at E. And that would be the way in which I would process this chart. At my item D actually is where you begin to see that new selling interest coming into the market, which would be inviting to me for this market to go up because you're not seeing liquidity being filled in below prices, below E, right? Down in here. I'm not seeing any liquidity being filled in where they would be interested in engaging in trade. Everything is above. And so I would want to be in alignment with that interest that's above and target that liquidity that I have at F. Do you follow all that, Ray?
Yeah, hello. Am I understandable?
You are,
Yes.
sir?
Mm-hmm.
Hi.
Yes,
Good
sir.
evening, all guys. My first
Yes,
time attempting here.
yes,
Thank
sir.
you very much so far for
Yes, sir.
everything you
Mhm,
did for me
mhm,
and for the other guys.
mhm,
And yeah, you are totally right with everything. I agree in total. My problem was we were near the day high when the first pullback approached,
mhm,
and it was very strong. So I said to me, okay, this is a hard move.
mhm,
Let's see what is coming afterwards.
mhm,
And then we have the double bottom.
mhm,
And then I said, okay, the double bottom at the 7.5 level.
mhm,
Normally, when I was a little keener, I
mhm,
would start here just an opportunity slot to say, okay, start it, give it a stop loss with 5 points and see what it will do.
mhm,
But in this case, I wanted to make sure what I am doing here. So I waited for the second bullish wedge or the first time this wedge, and you are totally right. After then, the aggressive buyers coming in, I should have started my trade at, I think, A2, around about A2 level, or yeah, I think so. Or,
Yeah. Yeah.
yeah, yeah.
mhm,
I think so.
This should have been the perfect entry for this move. And in real life, apart from this program, I would have started with 2 items,
mhm,
yeah, and then I had the TP1 for my first item
mhm,
approximately at the higher level here. This is 6 to 2, 6 to 4, and had
mhm,
the second one as a runner then upwards. Um, and then should have see what he will do. Yeah, but you are right. This is not a perfect TLBA setup. However, it looks a little like, and so I did this here.
mhm,
Yeah,
mhm, mhm.
but
Well,
you are right with everything. Yeah,
the thing with the
got it.
entry that I mentioned is that if you did take one off at 600, you'd have some money made. And like David said, he always likes to have a bank to work with, and that would finance the risk on the remaining contract. So I always try to prioritize that first one getting off with liquidity at the most consistent level that I think I can reach from the entry, and that's going to vary. There's no fixed value behind that. It could be 3 handles, it could be 10 handles. I just let the market determine the bookmap chart tell me which one where that first one will go. And that's why I focused that trade where I did, because I figured, you want to do 2 trades. I understand that 2 contract sets, but that first one would be a way where you could finance the remainder of the trade if you got filled there. You bring your
Yes,
stop up, you manage it right behind your exposure, and that's what this is about, right? It's about limiting your exposure in a very volatile environment. And that's the way that you can use those liquidity levels to do that.
yeah.
Do you
What
follow
is
me?
interesting here for me is this is like driving a sport wagon on the German Autobahn. This is very fast.
It is
Yeah,
very, thank you. Yeah.
in real life environment.
Oh,
And so just to see all the stuff is is a kind of sport for me, and I will get it one day, I hope.
You will.
You will.
There's
To
only
make
one thing. There's only one thing that you said that bothered me, it's when you said, "Let's see what it will do." Um, to take a trade to see what it will do. You want to take a
yeah,
trade when you know what it's going to do, and that's what we try to teach here in the academy. You see the difference?
yeah, to know and to know
You
is
know,
a different thing.
you've rehearsed in your
Yeah,
mind,
I
and because a lot of traders will buy within a range, and then they have to pray after that. We try to identify the ranges and a break of that range and know. And if it doesn't, we're going to know pretty quickly. So that was the only thing about what all you said. I didn't. I'm hoping you avoid that, and follow the program. Um, and one thing you might want to do is look at the YouTube video that Bruce talks about this trade, because it's one of my favorites. You can make a living off of it if you can really nail down and see the elements as they're being developed to your screen. You can be prepared to take it. You may get a few a day, and it's just a wonderful trade. It's a great strategy, and it's a complex strategy. I mean, it is a reversal trade. I mean, you are buying at a bottom or you're selling at a top. Very hard to do, but that
yeah,
trade allows you to see it coming. It's a wonderful trade. So I hope that you'll spend some time concentrating on it.
yeah,
But
yeah, yeah,
you have the elements here. You have the read. Your reads are all correct, but you just need to see the elements come into play and get the criteria satisfied before you jump on them. But well done,
yeah.
sir.
And this is my biggest problem, I think, is the management of the trades, the management of the right risk. And this is what I have to gain
Hmm.
so much,
It's all
so
screen
much.
time. It's all screen time.
Yeah,
Reps and sets.
okay.
Yep. Yes, sir.
Thank you very much, sir.
Yes. Yes, sir. Bruce.
David.
Thank you. No, well, welcome. It's great to have new trade up on the stage with us here. I'm with John. I've said that a lot tonight. This setup, this type of pattern, I love so much.
Yeah.
Price is scooted down on the left, Bruce, for whatever reason. We bumble along a bit, and then we start printing this. That's it. That higher low above the word, yeah, in that area there, that higher low, and then in comes the volume at C. That is where you just pull the trigger.
Yeah.
You will get there.
Yeah,
You,
yeah,
and you're
exact
off.
at this stage. Yes, yes, I see
That's it.
this. Yeah,
In you go. Then, as John has rightly said, you've got a little bit of headroom between where you get in there and then that
Yeah.
liquidity. If it comes off it, you're gonna, like we've had on some of the trades, would tell me you're just gonna make a couple of bucks. Brilliant. But you're not twitching like a rabbit's nose where you got in.
Yeah.
Where you're a little bit too close to it, and then the rest is history. But that pattern, I must put my hand up, Bruce. If I say this is my wheelhouse, along with John, in terms of playing these dips, because
Yeah.
that's what the market's been. I could say, unfortunately or fortunately, for the past 2-3 years. I'm less good at selling the top on the put a mirror to this the other way around. I'm less bold of shortening it when I get this reverse setup, but I'm trying to get there, Bruce. But yeah, as you say, I'm echoing John. You learn that you get this muscle memory of this, and you can feed yourself. This pattern, Bruce, you'll have seen today all day long, particularly at the open. In that power, in that start.
yeah,
Yeah.
To you, Bruce.
Yeah, I mean, this one actually, it is over on this side. It's pretty clean and clear.
Yeah.
And what John was saying about, like, you know, uh, especially this market in here, I mean, I would imagine, okay, we got the swing up here. It's testing the swing, and there is liquidity up there. But this thing moves.
yeah,
And it's usually when it hits that high liquidity that it reverses. I mean, it's almost like a really big example of like a binary kind of trade. It hits high liquidity, it sells off. It hits high liquidity, it goes back up. It's high liquidity, it comes back down. Anyway, I mean, here it blew through, but it retested right there, right?
Yeah.
Anyway, and look at the volume coming in. It's charging up. where is it going to go? It's going to likely, this is where it wants to go. It wants to go to the high liquidity. I mean, for that reason, I think the NQ is a good example. That you can really learn a lot from looking at that. God, what was I going to say? I'll turn it over to the other guys. There's a lot of other things here to comment on that we talked about earlier, but I'll turn it over to DNT. If you have any comments or questions.
I do a quick comment, which is the annotations are good. It looks like you're really delving into the order flow here, and I did this a lot when I was first annotating. I'd put a lot of annotations, kind of narrating the order flow and how I'd read it as I was since I was trying to learn it. I just wanted to give you something that I learned, which was don't burn yourself out doing it, though. You note it, and it's good to note it. And it's good to learn it, and if it helps you learn, keep doing it. If you find yourself burning out, you could probably ease off the gas a little bit on it. But if it helps, definitely do it. But if you notice, like I said, you can ease off the gas a little bit if it might help you out a little bit. This is really, really beautiful order flow, though, because this is trendline break accumulation there on the left is exactly what I look for it to go to. So once it breaks up high and the longs come in from your trendline break on the left side, I look to take profit right there at the mid, right, kind of where the liquidity came in at A. Yeah. And after it hits that, you don't really know what's going to happen at that point. As we can see here, it goes back down to the double bottom and it just kind of goes sideways. And I look for three things after it hits that mid, after it hits that profit target, after that trendline break. I look for it to either continue up through that liquidity and on the impulse like it did later at D, and for it to retest the mid area for a low volume pullback, just like that's written right there, your LVP on D. So I look for that to happen, or I look for the market to go sideways, which is what happened here. It took a long time for it to develop. Or I just look for the market might just completely reverse and just go down after it hits that mid. So this is just something that I look for after in the trendline break accumulation setup. After it hits that mid target, one of those three things, I look for one of those three things to happen. And as we can see, it did kind of two of them. It went sideways a long time and you waited it out, which was great. And then it impulsed above the mid, and then you got this like really slight pullback. Very definitely difficult to enter on that pullback at the mid for a low volume pullback long at the mid, but it's there. But these are three things that I look for from the trendline break accumulation after taking profit at the mid. One of those three scenarios, and here we can see two of those. Hopefully that makes sense.
Yeah, thank you very, very much. The problem for me was, additionally, this was a short gamma day. So I expected or assumed that we may have a reversal on the upper side to the VWAP again. And that's my conservative going out with my stop loss. What Bruce said, and he should have been right, I think so, that we have the liquidity above and not on the downside. So I should trade my plan and say, okay, it will go up. Look it up. Yeah.
It is tough, right? Because I like your entry. I do like your entry, but see, if my target was the mid, just like what John was saying, where the liquidity is at, it's just a few ticks away. It's hard. Your R factor is really being skewed because that's where you're really trying to take profit at. That's where the real take profit is at, right there. Where that hard liquidity is at, right above your head there. So you are entering for a low volume pullback for it to go higher, which is good. This all makes sense. I like your entry. I think it makes sense to me. I think like Bruce said, the right side of the
I gotta go to dinner, man. I'm dying.
Okay.
The right side of the
Hey,
Sorry,
if
I
you
thought
if
I
you
was.
if you
I
got
thought I was muted. I'm very sorry.
John, or if you
Oh,
guys
you're
need
good.
to if you guys need to drop, no
Gotta
no
go.
problem.
No, I really thought I was muted. Sorry.
Oh,
Hey, if you're hungry, man, you gotta go.
but no,
The
because
right side of the chart,
go
which what
ahead.
Bruce was saying, it makes a lot of sense. The right side is clean. I like what you did here. It does make sense. And if the trade failed, it's, I mean, your stop is right below that little structure there, and you're looking for a higher target. And yep, it's clean. Looks pretty good. Hopefully that helps.
I do have a
Thanks a lot,
comment.
guys.
I'm sorry, Raymond, I interrupted you. Uh, I do have a comment, but Shark, if you have something also you want to go through, and we'll just keep John hungry here for a minute or two longer. Sorry, John. Shark, anything?
I deserve it.
I was
I
on mute
just-
and talking. Um,
I should have been on
no,
mute.
everything everything DNT said there was really fantastic, and it's just a good reminder. And then the fact that John marked out that LVP there, I think it's a really good reminder to myself to not be so stuck on a single setup. You know, if price is going to explore this area, reject it, and then buyers are going to accept, like I don't need to be stuck to a single setup to get from point A to point B, right? I like what DNT said about looking for three things. He's mentioned before that if the TLVA doesn't play out or if you don't catch that entry, that there's often a low volume pullback that offers up a really good entry. And in this case, you know, where John pointed out that liquid offer at D, um, I think it's just a really good reminder that, you know, I want to go from point A to point B and I'm going to use whatever setup it takes to get there.
Okay. Guys, fair enough. I actually kind of have to disagree with you, to be honest. And I don't mean this like I don't want to get an academic debate about this or that, but here's where I'm coming from on this is take away stuff off the chart, especially Ray to begin with, because it will simplify and clarify. And now DNT also had a lot of stuff on to begin with, and he took it back off, and then now he's putting it back on because he's got a lot more experience. You know, however, now you've got the VWAP, you've got the mid, you've got the point of control, you've got, you know, a lot of different things, and you can see how this starts to evolve into, well, if it doesn't do this, you can do that, and now you can take this and you can do that. And like in the heat of the battle, I find that is very difficult for me to manage because I don't know. I haven't studied it enough. Now DNT says he has with this one especially right into the mid because he gets in early. He's had a habit of getting into early. So you know he studied this. You know, for me, like, well, I just don't see enough of the setup in here. Like, this is what I think John and David had mentioned earlier on. I don't see enough accumulation. In terms of the higher time frame level, I'm not really sure what it is either. And then maybe I guess low a day, but like then but this looks super clear to me. And that's where I would be very interested. And now you can, you know, I can take all these other things off, and I can just focus on the, you know, the volume coming in, breaking structure, and then the relationship in here. I mean, beautiful low volume pullback. Now I love that with DNT. I love it that he gets kind of caught up in these on maybe a little early, but he knows he can get the he knows he can get the low volume pullback. And you've got another trade kind of in your pocket here. and take advantage of that. And this one is nice. These are really nice, pockets of volume. Is charging up. Where's it? If it's charging up, and where's it going to go? It's likely going to go
Yeah.
to the high liquidity. And
Yeah.
I think like Tomi and Vinfra maybe have learned that just clarify, keep it simple, and find what works for you. But anyway,
Yeah.
those are my thoughts on it, of what I see here.
Thank you so much,
It
Bruce.
just gets
Yeah, I will do.
confusing.
Yeah. Okay.
Yeah.
Good points. No disagreement. It makes a lot of sense.
Good stuff, Bruce.
I'm gonna let John take us out because he's got to go. So he's gonna go okay, everybody, let's go eat. All right, bye.
Good job, Ray.
Yeah, great job,
Thanks
Ray.
a lot.
Way to get involved.
Oh boy, these meetings seem to get better each week. I think this is the best one yet. The reviews that we saw demonstrated how to review, the process of reviewing, and how consistent they were. So, for those that are posting charts into the program, first priority is to post charts, but your second priority is to review. And I think that you should also work on your review to become self-sufficient, because in the end, when it comes time to trading, you're going to have to review in real time. You're going to have to recognize the chart, recognize the criteria on the chart, and do a quick review and decide whether or not you want to act on it. So great to see the posts, but also spend time on your own reviews so that you can compare them to the coach's review when you get into the meeting. So very good. I enjoyed being here, and thank you, and we'll see you next week.
All right, and enjoy your dinner.
Thank you, sir. Good night.
All right, good night, everybody.
Good night, everyone. Take care. Thanks a lot.
Bye-bye.
Bye. Bye.